All right, guys. So let's go back to where we stopped. So you can see on my screen here we have MT5. And why do we use MT5? MT5 and MT4 doesn't have much difference. The only difference is because one is optimized more than the other one. So it has more tools and it has more indicators, and it works with a different programming code. Yeah, but it's still MySQL programming code. So, but generally they do one thing, which is to allow you to make use of the charts and give you the ability to trade, give a trading window and allow you to trade the forex market. So your broker is connected to Meta Code, and Meta Code is just Meta Code is a platform that will allow you to take trades, do analysis, execute your trade, and give you the different other opportunity to trade the forex market efficiently. So let me go quickly. Now this is the interface. Now on this interface here, you can see we have our charts, the red line and the red bar and the green bar. So the green bar simply means bullish in the market, while the red bar simply means bearish in the market. What does that mean? It means that at the point you see where we have this green line, it could be any color. Mind you, you can customize this to any color. You can customize this to any color. So, but here the customization is default, and the default is that the rate that you're seeing significantly shows that there is a bear in the market. What means there are sellers in the market. The green that you're seeing is showing a bullish momentum, which means that they are bullish. The market is going bullish. Buyers in the market. So we've done this. We've done this before on a basic class. So now we're on the interface, how the trading interface works. So now pay attention. On this down bar, you will see quotes, charts, trades, history, and message. So we use this to navigate through the MT5, first of all. So on your quotes is where we have the currencies, the instrument that should be traded. Now on this instrument, we can see if we did currency pairs on our basic class, which we talk about, the currency are being paid in are being traded in pairs, which is one currency against the other, Europe USD, and they are being abbreviated. So you can see we have Europe USD, which is Europe US dollar, GBP USD, which is GBP or pounds, which is pounds, dollar, and USD CHF, which is US dollar paid with Swiss francs, US dollar also paid with Japanese yen, US dollar. I don't know this currency, but these are exotic currency. All right. So another thing you have to know here that you can see on your right hand side, you can see the quotes. We talk about bid and ask price. So you can see the low price and the higher price. Look at, you can see the numbers where we have 0 point something like in AUD USD, you can see here 0.6402, and you have 0.6404. So it's showing you the high and the low of the market, right? And it's also going to show you the spread and all of that. So what you can do on this interface is for you to edit your quotes. You want to see currency pairs you want to trade. You want to make it visible for you. So you can edit this code by removing and also adding some pairs that is tradable for you. Remember we talk about when you're starting out to trade, you have to look at the major currency pairs. So we have barely few major currency pairs here. So we're going to add few. So we have New Zealand dollar, which is NZD, and we have USD card here. We have GBP USD, Europe USD here. So what we're going to do, you check on your right hand side of the your window, you will see plus sign and one other sign that looks like a pen. So what you need to do, you click on the pen, which is going to show you another interface. So what you want to do, I want to remove some of the page that I don't want to see on my quotes. So I'm going to click on this delete icon. Once you click on the delete icon, you can now check those ones that you don't want to see. You can now check some of those. Okay, I don't want to trade USCHF. I don't want to trade USDJPY. USD card, I don't want to trade USD card. USD SEC, I don't want to trade USD SEC. So what I'm going to do now, I'm going to click on the delete, and that is it. So I'm going to click on select symbol, go back icon. So if I click on that, you can see now my interface, my quote interface is reduced, right? It's not as many as it were before, and I have a very small quotes here. So I have Europe USD, GBP USD, AED USD, NZD USD. So the same thing if I want to add more currency pairs. Let's say I'm not seeing Europe GBP here. I like trading Europe GBP. So what I'm going to do is I'm going to click on this cross sign, and you can see here we have Forex, indexes, metals, NASDAQ. So this is just to tell you that we have different instruments that you can trade. If this demo account was opened with a broker, this is a default MT4 or MT5 account. So the instrument that's going to be here is going to be limited to what I can trade, because I'm not using a broker. And mind you, your trading instrument has to be provided to you by your broker. Okay, so but what you have here is let me go to Forex. So if I go to Forex, I'm going to see different currency pairs, right? So what I want to search now is going to be the one that I'm looking out for. So I'm looking for Europe GBP. So what I'm going to do is I'm going to type Europe GBP. So you can see now I have Europe GBP pop up for me. That means Euro versus pound sterling. So I'll click on this cross icon on my right hand, and that is going to be added to my watch list, right? That's going to be added to my watch list. So if you come back to my quotes, you can see here we have Europe GBP added. It wasn't here before, but I can add it. If I want to go back to add other pairs, let's say I want to add gold. So what I'm going to do is I can just search gold. So gold is known as we can search gold and have it, or you can go like add ZAC USD, which is XAUSD, also called. So I'm gonna search it here on Forex gold. We may not have it here because I'm not sure that Meta codes provide that, but let me search ZAC USD. Okay, we have ZAC USD here. Gold versus US dollar. So what I'm going to do is that, you see, we have also gold versus Great British pounds. We have gold versus Europe. We have gold versus Swiss francs, gold versus Australian dollar. So what we're going to have here is gold US dollar. So I'm going to add gold right here. So I'll just click on this cross icon and go back to my quote. Is going to be added. So gold is already added to my quote. So what this means is I'm not exposed to many pairs, because the idea of trading for traders is you want to trade the market that has high liquidity and high volatility. So exotic pairs, minor pairs, crosses are not going to give you that liquidity and high liquidity and volume and volatility, because they are not majorly being traded. They are not the most traded pairs, right? And again, the cost of trading them is also very high, because trading has a commission, which is spread, right? Or what is spread? Spread is derived from your difference between your bid and ask price is your spread. So your brokers charge you spread, or they charge you direct commission based on your trading volume, maybe one standard lot, two standard lot. They can charge you as high as $10 per a lot size, or even more, or even charge you less. So, but for now, we want to focus on this. So the next thing we have here is charts. So looking at these 4 bars, or be 5 icons or bars on your what do they call it? I think tax bar here. You're going to have quotes, charts, trade, history, message. So this other one is your chart. So on your chart here, if you look at the top right-hand side, you're going to see cross sign. This cross icon is to navigate through, if you want to read certain areas and you want to read the chart. So you can just use it as your cursor where you're using to navigate through your interface and read price on your right hand side. So these are the price bar. Your right hand side here shows you your price bar, and then we have this other one. This is an indicator where you add a couple of indicators like moving averages. If you notice on my chart, I do have moving average and stochastic on my charts. Yes, I use them sometimes for primary or secondary confirmation. But the first idea is that you know how to trade before you know how to use any trading indicators. Indicators are just price, market price indicators that shows you, what the market is doing. Basically, I use, for example, stochastic. You're not coming to indicators yet, but I'm just trying to mention so you understand. Something like stochastic, where we use for price oversold and overbought areas to see where price levels are. Now, for here is time frame. So, time frame, you can indicate time frame. If you tap on your screen, you can also see time frame. So 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, which is H1, H4, D1 is daily, W1 is weekly, all of that. And here we have tools, where you can use to draw on your chart. We are coming to that. And here we have trading icon. So you can instantly set your limits, limit orders and all of that. Sell limits, buy limits, sell stop, buy stop. Once you click on this other icon here, I will show you how to use that. And this other one is your buy and sell windows. So there's a lot of updates that has happened within MT5. So a lot of things has changed. There are different ways to get around some certain things. They make it very simple now. If you know how to use it before, the update that they have made make it very seamless for you to use it now. So you can always click this and it will disappear, and you click this, it's gonna come back and it will show you sells and show you buys. I'll explain what this means when we come back here. So I'm trying to just show you so that you'll be familiar with your be familiar with the interface right now. We'll do application of what we have on the interface very soon. So what else is that we have, look at your tax bar, you have trades. So here you can see your balance. Your balance is $100,000 I have here. Equity is 100,000. Free margin is 100,000. So the difference between equity and balance, what is the difference between an equity and balance? Please let me know if you guys can hear me. Let me just be sure. Can somebody say something? Let me know you can hear me.
We can't hear you.
Okay, so that's fine. Thank you. So now the balance here is showing you what you have as a total balance. Your equity is also showing you what you have as your total balance, both profit and negative. And now this is going to change. Your equity is going to change when you are currently running a trade. So when all your trades are closed, you don't have a running trade. What you have is your balance. Your equity is going to become your balance, because at that point, you're not trading. You're not in loss. You're not in profit. So your balance remain, and your equity shows you the status of what your account is looking like while you're trading, whether you're making more money or you're losing more money. So at the end of the trading day, when you close your open positions, which is your trades, it's going to go back. Your equity now is going to return to be your balance, or your balance is going to turn to be your equity, because at this point, you're not doing anything. So equity shows you how much money you have for a certain amount of trade and how much is available or not. And then free margin. Free margin shows you, like as at now, this account is 1:100. 1:100. So what I mean is that for every 100,000, I have a free margin of 100,000, which is 1:100. We understand that leverage. This is how leverage system has been represented. When we talk about leverage system, you're going to see it as free margin, or you're going to see as you're going to see as free margin percentage on your accounts. It's showing you how much you'll have leverage on the system. So it means that at this point I can trade up to like 100 lots, because this account is more like I'm using a leverage of 1:100, so I have more volume to trade with. I can trade a higher lot size because I'm leveraging 1 is to 100 on this account. So now, when we take trades, if we start trading now, you're going to see that you're going to see have open positions and profit and minus and all of that close. A lot of things going to happen on this window soon. So we now have history. So this history is going to show you your current profits, deposits. If there's a deposit for the day, it's going to show if there's a charge of swap. Swap is being charged while you keep your trade overnight. So if you're trading and then you open the trade today and you're closing it tomorrow, your broker can decide, depending on the type of account, it can decide to charge you a swap. So swap is you're trading entering to another session or another trading day, right? So they're going to charge you for keeping that trade as long as possible. If you keep it for 1 week, they keep charging you maybe every day, depending on the volume and depending on the swap condition of your account, But mind you, there are other brokers that don't charge you swap. Like Octa does not charge you swap. If you like, keep your trade for 2 months, 1 year. That trade is going to either run in profit or loss. Saying that the broker is going to charge you, they're not going to charge you any money. Even commission, they don't charge you commission. The only thing they charge you is spread, which is a standard spread. Whatever the market gives as spread is what they take, as their own. Okay, so we have commission. In some cases, account has commission applies. So sometimes you can have swap-free accounts or you have commission accounts depending on the contract size that you're trading with. Okay, and you can see more details here when the account was opened, when the deposit came in, the balance and all of that. If you check here, you will see balance. You can read when the account. So I just opened this demo account because I just launched this MT5 and I created this default account on the MT5 platform. Okay, so orders is showing you history of your orders, deals showing you history of your deals, and you can filter when you want to see that. So you can see it as today, last week, last month, last 3 months, and you can customize the period. Maybe if you want to see for the past 1 year, past 2 years, 3 years, or a period of time, you can go back and customize what you want to see. You can see here as your history, right? Trading history. And here you want to sort it out. Maybe you have a lot of history trading records and you want to sort it. You want the profit to come up or you want the profit to come down. Or you want to sort it by time that trade was opening. Okay. And you can sort it out by time, by type, maybe type of currency. You can sort it out by type, and it will show you by type. If you want to sort it out by maybe deal, by deal is going to be either buy or sells, then it's going to show. So you just play around with your history. All symbols here as well. In case of you having a lot of currency pairs you've been trading with. So if you come here, you can select which currency pairs do you want to see. If I'm trading already on this account, there's no trade done yet on this account. I will be able to see different symbols I want to see history on. So if I'm traded AUD USD, I will have AUD USD shown here, GBP and all of that, and I can click each of them to see their trading history and records. And I also customize to what I want to see right here. So message right here. So this is where your broker can send you message of maybe margin call. They likely like to send you margin call. If you're trading newly and you don't know what margin call is, I will explain. So margin call is when your trades, your risk exposure is higher than the money in your account. So it means that your account has traded below 60% or 50%, depending on the leverage you're using. If your account has traded below 50%, it means your risk exposure is very high and you have a higher chances of losing all that money in your account, except you put more money. So margin call is a call your broker sends to you telling you that, look, your trades is running very high negative. There's no enough money in your account. Kindly put more money in your account so that you can sustain and hold your positions. If you don't have enough money in your account, your broker can decide to close that trade depending on their trade host. If their margin call is 50%, they will start from the highest position that is in negative and start closing it for you. And if the margin still go low, they will keep on closing until they close all the position out if you don't have enough money or liquidity to hold it down, right? So here also you'll receive a couple of messages about news, about events, about holidays, about things happening, and all of that. So once you log in your accounts, you're gonna get some of those updates, direct messages, and all of that. They also have MySQL community where um, traders and developers, uh, connect together on this platform. So let's go back to where we start from on quote. Now look at this chart. If you look at this chart, check out my left hand side. Check out my left hand side. You're going to see the currency pair that I'm on currently on. So I'm currently on Euro USD chart, and you can see Euro versus US dollar. Check on your left hand side right corner, and you can also see I have US dollar. I have US. You can also see M5 there. That M5 is showing the time frame I am on, right? So now, if I want to change the time frame, I just have to type on the screen, and I can change to M15. M15 is here. It means that the time frame has changed to M15. I can go to M30. I can go to H1, which is 1 hour time frame. I can go to H4. So what does it mean to navigate through all of these time frames? What does it mean to navigate through all of this time frame? Let me explain. Now, when we talk about candlestick, right? What we mean by candlestick is what you're seeing on this chart. Is this green, red, green, red, green, red? Okay? It represents price. I will explain. It represents price. And now, each of these candlesticks, like what I'm on right now, is H4. The H4 is 4 hours time frame, which is every single candlestick that you can see here, either green or red, are formed within the interval of 4 hours. So the opening price and the closing price of each of these candlesticks, the intervals or the period is within 4 hours. So if I go to daily, which is D1, it means that every candlesticks like you're seeing here, the red, the green, each of them are formed within a day, within 24 hours, which is day 1. So the opening price and the closing price are within what? Are within a day. So now from this place that I'm drawing this from this place that I'm having, what do you call it, that I'm having this cursor right here, if I want to count how many days this chart it is, and I can start by counting this candlestick by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 24, 26, 27, 28, 29, 30, 31, 32. This is almost like a month. So 30 days from where we have here from this place. Let me draw if I can. Hold on. Let me draw. Okay, I think so. From this place to this place is 30 days. Why? Because we are on a daily time frame. So each candle represents each trading day. Each candle represents each trading day. And what is it telling you? It's telling you one thing. One thing is either that day it was bullish or either that day it was bearish. It's telling you it's either the buyers was in power or sellers was in power that day. So if it was 30 days like the way it is right now, what is it showing you? Between where I draw this arrow to where the arrow ending, the starting point of this arrow to where this arrow, ends, here to here, what does that mean? It means that for these 30 days, this market has been going upward. And for that 30 days, it means that buyers has been strong to push the market upward, and then the market has been bullish. Yeah, we have sell days. It's almost a month, 30 days. That's a month, all right? 30 days of trading days. So in between these 30 days, we still have sales opportunity, which we have this other day, the market traded this high, created this from here to here, it was bull, and then the next day, which we have this red candles, it started selling from here to here. So there was a sell opportunity, but then the sell was not that strong because this is where the bull started. So the market was the internal structure or intervals we have, like within the day, 4 hours sales, 4 hours buys, and all of that. So the next day we still have the bullish market because this one turned green, and the next day was bullish. The next day was, bullish, but then it came back and closes within the day as bearish. Now I'm going to explain the candlestick anatomy, how the candlesticks, form a red and form a green. That ending up being a red and ending up being a green and ending up being a bullish at the end of the day and a bearish at the end of the day. And one other thing you can see that the candles don't have the same shapes. One has a long wick. What we call wick is this small line ahead of if take a look at the traditional candle. A traditional candle will have a wick, that thing that you put fire on before the candlestick burn. And then they have the wick, the body, and all of that. So this one also have wick, it has body, and that's, different sizes, range candles, tiny candles. Candlestick normally has different formation, different shapes, and different names. So if you've gone through the beginner's class, yet another one that if you did not go through that beginner's class, you're missing a lot because the candlestick anatomy has been explained, the different shape, different formation of candlesticks, you see them, patterns and all of that. Okay, so all I'm trying to do today is just to carry you along on this trading platform so that when next we send signals, you can, take trades and you can understand how to use this and not be afraid to press. Because I remember when I started, the first day I had MT5, I was afraid to touch anything. I didn't want to press before my money would disappear. Okay, even when I did not even put money, I just didn't want to touch anything so that I don't come back and say, oh, because you touched that, that's why when you deposit your money, the money was gone. No. So this is a very friendly interface. You just have to know how it works. Okay, so what else do we have to do? So I've explained the time frame, so you can go back to 15 minutes time frame. I will tell you the use of some of this lower time frame and higher time frame. So the time frame is divided into like two, which we have the lower time frame and we also have the higher time frame. So where do we start counting the lower time frame? The lower time frame is from 1 minute, 5 minutes, 15 minutes, 30 minutes, H1, which is 1 hour. Higher time frame begins from 1 hour, H4, D1, weekly time frame, monthly time frame. So the same way, like I explained, the daily time frame is the same way the monthly time frame also looks like, right? So this is going to load. Now, on this time frame, which is monthly time frame, it means that each candlestick here, it's open and close at the interval of each month. So that place we counted. Look at this. Look at this arrow. Remember this arrow that I drew on the daily time frame. So it means that about 30 days that the candle we counted only makes what one candlesticks on a monthly time frame. So all that from the starting of this candle, this was the starting to where it is right now. It means that only one candlestick we have there. So for 30 days, if we go to a higher time frame, which is monthly time frame, we only have one candlestick form. And what that showed you, it showed that for the entire month, the market has been bullish because right here, this is a green candle form. It has gone as high as here, as this price. It's about 1.15549, and then it closes at about 1.
Hello.
Do you guys still hear me, please?
Not really.
I think
We got
sorry,
lost.
I think my internet was interrupted. But you can hear me now, right?
Yes.
Okay, so far let me just have a question so that I wouldn't be talking and talking. If you have a question, can you ask me? Let me know. Anyone has a question or there's something you don't understand so far I've explained, let me know. So you have been unmuted. so you can speak. Oh, my screen is going off. Anyone has a question, please? Anyone has a question?
Hello, can you hear me?
Yeah, I can hear you. Go ahead.
Okay, please, I have a question with this chat. Like, I'm not really understanding it. I think that's the part it's still very strange. Like, I'm trying to really get it, how the candles and everything, and the day, like when you draw the cursor or something, where your arrows are pointing. I'm trying to really get the whole thing, how it functions. So it's just in the chat. Every other trade history, all those ones are like very somehow easy to comprehend. But I think in the chat, we really have to understand how the chat functions. Thank you.
Okay, so yeah, I will explain the charts. The whole essence of trading is basically is the chart. So if you don't understand the chart, it means there's something wrong. Okay, I think my network is giving me an issue now. My chart is trying to load. So we'll explain the chart more. Just that I'm trying to show you the interface. We'll talk about how to analyze, how to use a candlestick to analyze and understand how to make trade decisions when you finally, do the analysis and know where to buy and where to sell. Now we'll come to understanding the charts. We'll teach you how to understand the markets and the charts because it's all about here. It all starts and ends here. If you don't know how to analyze the charts, that's where the big problem is. Okay, it's complicated, but you have to pay attention, and it's also very simple when you practice with it. So I know you guys are seeing my screen, but then my chat is not loading. That's because of my network, guys. So first thing, before we go back to chat and we talk about chat, how many of you have been trading? You've taken your first trade before? Let me know. You've taken your first trade before. Okay, if you haven't taken your first trade before, let me know. You haven't do buy or sell before as a trader, or since you joined the community, or since you downloaded this app, let me know. If you haven't done it. Now, let me say something. When it comes to trading, don't be shy. Ask questions. What you don't know, ask questions. Don't ever feel that, oh, you're left behind, or am I the only one? Because you're on your own. What I mean you're on your own is that if you don't understand, nobody's going to explain to you. So the opportunity you have to ask the question, the opportunity you have to interact, you have to be open-minded to learn. You have to be open-minded to learn. That's just it. So there's no pride in it. No one is bigger than anyone. We are just here to, make each other grow, support each other, and do in a possible way we could, right? So the other responsibility is that you have the entire responsibility to be committed to yourself. Because even if you don't show up on this live session, there's nobody that's going to call you and say, hey, what's up? We didn't see you on a live session today. Why? Nobody's going to do that unless otherwise maybe you were on a paid mentorship where you paid maybe you paid $1,000, and even if you pay $1,000, I'm sure you won't even you'll be the one calling maybe your mentor, calling on the community. We haven't had training today. We haven't had training because your money is at stake, right? So that being said, you have to be open-minded so that you can learn. I'm trying to wait for my network to allow my chat to load. So now, if you haven't taken trade before, I want to see you guys take trade today, first trade today. So go to your MT5. If you haven't created an account, this is where to create your account. Once you launch your MT5, it's going to prompt you to create account, a demo account. So you can see here on this screen, I have my name, Godwin Greg, account ID 9256571. And there's a tag here that shows demo, okay, MetaQuotes demo. So I'm actually using a MetaQuotes demo as a default account. I haven't added my broker's account here. And if you take a look, you will be able to see manage accounts. So I can have more than one trading account on this MT5. one trading dedicated account or more than one trading dedicated. So all I need to do is just to click on that manage account, and I come here. I can add more accounts. Search my broker. Let's say Okta, right? If I have a demo account with Okta, what that means is I have gone to Okta back office and apply and create a demo account. When I create that demo account, they're going to send to my email the credentials, the login credentials to my MT5, which is going to come with my saver name, and it's going to come with my trade ID and my investor's password and trading password. So what you need among those is those saver name, trade ID or MT5 ID, and your trading password. And once you come to where I just showed you now, just come to add plus this. If this is what you see, you click on this plus sign, and that's because you find your broker. You just click on search your broker name, or you search your saver name, and click select the saver. You can see where I have your saver. Select the saver, Okta FX demo. I have Okta Real 2, Okta Demo. So click on Okta Demo, you see the demo account. Type in your ID, type in your password. Make sure you check this safe password so that you don't always come back and look for it. And click on login. It's going to load if your credentials are correct, and then it will give you a trading account and give you other access, right? So this meta code is limited. This particularly meta codes because they're just giving you very few instruments for you to just use their platform, but you need the brokers a demo account that will provide you the trading instrument that you need for trading. So create the account. I did that so that you can know where to create your accounts. When you want to open, let me do it again. If I want to open a new account, like this meta code now, or maybe I use a broker and open, all I need to do just to, you can see open a demo account here to learn trading and test your strategies. So I can click on demo accounts. And this one has autofill me because I've already filled these details, and it's just stored some of those details on my phone. So it just autofill me. So I can open another demo account now and even change the name. If I want to change the name here, this is demo account. So I can open another demo account. So I can set Godwin Billions, right? And I open another demo account. So all I need to fill my name, date of birth, phone number, Gmail, and what again? Yeah, this is meta quotes, first H, this one's a default. Then leverage. Okay, so leverage here I can use 1:500 or 1:100, 1:200, but not between 1:500. And I can change the amount of money I want to be deposited for me as my demo. So $10,000 here. So I accept terms and conditions. So this I'm going to create another done. So I could have shown you. If you saw what happens there, you will see they give me password and password that I can log into another phone or devices if I want to, with ID and all of that, server name and all of that. So look at this. You'll see this new account I just created. You will see meta quotes demo, access points, euro, pound. You can see the name and the company and all of that. So when we have another section, I'm going to show you how to create your demo account with your broker, right? So that you can come here and log in, both your demo account or your live account. You can come and log in. So now this account is another account. You can see I have to come back and edit my quotes. I can also change here, manage accounts if I want to log into the other account that has my name, Godwin Greg. So I just have to come back here and select this one. Okay, you can see my password and my login ID. I just have to continue to sign in. It's going to load me and put me back on that account. So coming back here, I have my previous quotes and all of that. So let's go back to what we want to do. I want to believe that you guys have your MT5 with you, and then let's take our first trade. So this trade, we're going to just take it at random. I'm probably just going to take it and hold it, but it's just for an illustration. There's no analysis as to this. Okay, it's just for us to know where do we actually do the buy and selling. Where do we actually do the buy and the selling? Okay, so sorry about that. Yeah, so I want to be sure you guys are still hearing me. If you can hear me, please say something so that I know that you can hear me. Still hearing me, guys?
Can hear you.
All right, that's good. So now look at your chart. If you look at your chart, check out your right hand side. You're going to see this, this icon here. I just click on that. So you're going to see something pop up. One is going to be sales, one is going to be buy. Now this is where we all do the buy and the selling. It's as simple as that. And the easiest thing to do as a trader is to place buy and place sell. Is the easiest thing to do. So anybody that has this application, has meta quotes on his phone, has Match Trader, has Trading View, and has C Trader, and even Octa trading app, because Octa has its own trading app, just like this meta quote. So if you're not using meta quotes, you can use Octa, its own trading app, so you can trade inside your brokers. While you file your orders and all of that. I will show you all of that too. Or use C Trader, use Trading View, and all of that. So here, if you click here, it's going to bring out these two icons, which is one is sell, which is buy. So what I'm going to do is now check out the middle. The middle there, you're going to see what we have 0.01. What does that signify? So you can actually change that by just clicking on that arrow up or arrow down and select 0.01 to 0.02 to 0.09 to 1. 1 means one standard. The same thing, if you want to tap, you can be tapping and it's going to be going down. So between 0.001 or 0.01, you can have 0.5, 0.6, 0.8, 0.18, and all of that, right? Until you have one standard. Okay, so now remember when we did our beginners class, we talk about types of trading accounts. And again, if you not listen to that class, there's a recording of that class. Please, you have to go back and watch the complete video of that. It's a series, not even a video. We took almost a month to complete that course. So you have to complete that course on your own time before you come back to this platform. Else, you'll be more confused, even though you know how to place the buy and sell. And you understand that placing the buy and sell doesn't end there, right? There are things that you need to understand and know as basic. That's going to build upon you every other information, skills, whatever it is, to understand how things work, right? How things work, you need to know that. So here we talk about this. Well, we have a standard lot, we have a mini lot, we have a micro lot, we have a nano lot. So about 4. And these 4 types of lots represent the type of accounts you're trading, right? And also represents your correlations with your payouts, I should say. Let me use that word, payouts. So profit, your earnings. So lot size is a standardized contract size that tells your broker how much volume you've put into the trading and how much they're going to pay you. For example, one standard lot equals to about $10, if I don't make a mistake, on a standard pay, a major pay, right? For each standard lot, each price movement for each standard lot, your broker is going to pay you $10. That is what it means. Pips. What are pips? Pips is simple, a measurement of price movement from points A to points B. If you want to tell somebody, oh, today I traded today's market, I traded gold, and gold hit over 100 pips. A trader will understand what 100 pips means. It simply means that gold has moved from this point to that point, and how far is going to go down today? 100 pips. I know what that means because if I calculate 100 pips with my volume, trading volume, which is my lot size. So if my lot size is one standard, which is 1, it means that I have to multiply 100, that one standard times 100. It means that for that 100 pips, I've done about $100 and something or more, right? So that is how it's being correlated. So if it was to be a micro lot, which is 0.01, you're going to be paid about 50 cents, 50 cents per pip, per price movement. A pip signifies one price movement, right? So the same thing with the mini lot. What is a mini lot? A mini lot is 0.1, which is about I think it's about one standard. Sorry, $1. It's about $1 per a mini lot. So for each price movement, you're going to be paid you're going to be paid $1 for it. So if it moves they say 100 pips. Okay, I think I made a mistake the other time. 100 pips for $1, you made $100 because you traded with what 0.0. We traded with 0.1, which is a mini lot. So for a standard lot, $10 times 100. Okay, you also made about $1,000 or so. So let's go back with here. So now we can trade with $1,000 with one standard lot here. You need the volume to tell your broker how much is going to pay you price movement. And this also significantly tells what kind of accounts you're trading with, because when we talk about risk management, this is all lies here. It's all lies with this number. Because if you have a lower account, like $100 account, there's no way you're going to trade one standard lot and survive. Why? Because if you trade one standard lot, one price movement is $10. So one pip is $10. And how much do you have on your account? Is $100. So if price move like 5 pips, your account is gone. On a regular, gold will just casually move 10 pips, 20 pips, effortlessly. So you cannot trade one standard lot on a small account. That is where risk management comes in. So you have to understand the trading volume, your account size, and your risk appetite. Trading volume, account size, risk appetite, and all of that. We'll come to all of that as you continue trading. Right? So now let's trade Europe USD. We are on Europe USD right now. 30 minutes time frame. And what we want to do now, we're going to buy this market, right? This is a casual trade. There's no analysis done on it. We just want to do it in an illustration. So all I need to do is to place any of these if I want to buy or sell. So after setting my lot size, based on my account size, my volume, all of that, my risk appetite and all of that, I can place either buy or sell based on my trade direction, based on my trade decisions, based on my technical or fundamental analysis. So what I'm going to place now is a buy. Okay, so since I'm taking this this is the first time I want to place trade on this MT5 since I opened this account. That's why it's giving me this prompt. So this prompt is just to give you a disclaimer to tell you that you're about to activate an action, and it's not going to show after now. So if you want to read through, you're about to activate one-click trade mode. By clicking I accept these terms and conditions below, you acknowledge that you have read and understood the following terms and conditions, and you are agreed to bound to hereby. You can activate one-click trading and all of that, blah, blah, blah. So this means that they want you to be aware that, you're about to take an action on something. So let it be not, making a mistake. It should be a conscious decision. So what I'm going to do now is I just have to accept that, and I come back here. It's not going to show that again, and click on buy. So if you look at my screen, you will see one buy done. They give me that. And if you look at my charts, you will see on my right hand side, at the end of my right hand side, check out the middle, you see buy one, which is signify one standard. And there's a blue line, that just showed on that screen. So that is showing me my entry price. That's significantly showing me my entry price. So I don't know if we are doing much for today, but I just wanted to be sure that everyone is live right here and following through this particular illustration. So what I mean is that As I placed the buy now, it means that if this market goes up, maybe to this area, I'm going to make money. If this market goes down to this area, I'm going to lose money. So where my entry is, because I'm buying, I'm expecting that the market is going to buy, which is going to go up. And if it goes up, I'm going to make money. If it goes down, I'm not making money. That is just a simple thing here to note. All right. Okay. So I want to see if you're new to MT5, MT4, let me know if you've placed your buy on Europe USD. Just share your screenshot or just let me know that done something today. If you've taken an order, let me know. Now check out the tax bar again. Come here, you will see that order. Now, do you remember when I talk about your equity and your balance? If you check now, the equity is lower than the balance. Why? Because I'm running a trade, an open trade here, which is reading minus $40 now. So I'm running an open trade, which is reading minus $40 now. And yeah, minus $40. So if this goes up and make me a profit, so let's say that minus is not minus, it's rather a positive. That means you're going to see it on my equity, maybe 100 and something $1,000, $140,000, 110, 105, 150 cents, and all of that. And if I close this trade right now, to close this trade, I just have to click on, either drag this up, just slide on it. Your right hand side, you will see some of this icon here. So this icon here can take you to modify this order, or take you back to the chart, or take you back to close this trade. So if I want to close this trade now, you can see close with loss, $50. So this trade currently is running negative, and I can decide to close it loss, $50. I can decide to allow it run till it enter to profit, and before I can close it in profit. I can modify. So we're not going to talk about modification of trades here today. Some other class will talk about modification of trade. So, but what I'm going to do right here, I'm going to close this trade here. So I'll close it with loss. Okay, so closing it with loss, you can see now that my equity has turned to my balance, because if you go to my history, I've done what? I've closed a trade that is in minus. So this was my deposit today. At the time I created the account, and this is my current balance, and this is my history, which is the first trade I've taken. And this trade has its meta. You can see the price that was entered, you can see the price that was exited, exit price, and all of that. So there's a whole lot of things that we're going to come back to discuss about here. SL, TP, and all of that stuff put together. So let me take questions. I think we have already done more than an hour since we started, plus the delay that we had. But let me take a few questions. We will soon end the session here, and we'll pray and believe God that we're going to have these sections again. Have this section again so that we can talk about some other stuff that we are not able to touch. Like we are not able to touch about market order, the charts, and some other things again here. So for now, anybody has any questions, let's answer some questions before we can pull away from today's call.
Hello?
Yeah, I can hear you.
Okay, good afternoon. Good
Yeah,
afternoon,
good afternoon. Good afternoon.
Yeah, actually, I've been using the MT5 for my demo trading for a while now. So, actually, this one, not the phone that I'm using for my trading. This particular phone I'm using now, not the one that I have my MT5.
Okay.
My question is, there was a particular message you dropped on WhatsApp yesterday. After showing the result of your trade, and you wrote something there, and you said that you always make profit in the market anytime, except the only way you don't make profit in the market is when you don't trade.
Exactly.
So my question is how can one understand come to that level of consistency in the forex market? Understand? Because for somebody to attain that level of always making money in the market, I don't think it's easy. Some people say, oh, you learn, but I'd like to know what methods of learning can someone undergo to attain that level of consistency in making profit in the forex market. Thank you, sir.
All right, I think you asked a very. You just made me understand that a lot of people pay attention. Okay, you asked a very vital, valid question. Okay, yeah. That claim that you see there is not just a claim. Not. I know some traders do say that. Oh, we always make money in the market, but it's a claim with proofs. You don't just wake up and make claims, right? So first of all, I've been trading. This is more than 6 years now, or this should be my 6th year of trading. I have a decade, so I started trading since 2019. Okay, so it took me at least 2 years to become profitable, not consistent, to become profitable. So what that means is, at some point, I started making money and losing money, making money and losing money. Okay, so that's how it took me to. Hold on a minute, please. All right, thank you. So that's how it started from. So consistency is quite different from being profitable. You can be a profitable trader and have an edge, but being a consistent profitable is another thing, right? It means that you've mastered your strategy, you have an edge, and you can repeat your results again and again and again. Okay, so first of all, maybe it took me 2 years. It can take you 2 months, 1 month, 6 months. So the time I use is not a yardstick that it's going to take you two years as well. So for some reasons, at that point, trading was not popular. There was not enough content on the internet. In fact, you could barely see a broker advertise on Facebook. No campaign, nothing like that, right? So it was very few and handful of people that knew about trading, and there was not even a community. If you go to Telegram, no community, no WhatsApp community that you see that other people are learning or even have interest on to learn. So the whole thing was you have to work very hard, and if you have a small community, you have to be very dedicated to get some strategies and learn and practice on their own and all of that. So it takes you to have a workable trading strategy. There's 1,001 trading strategy. 1,001 trading strategy. I used to tell my people that every strategy works. You know why I said every strategy works? Because if you're consistently losing on a certain strategy, it means that if you had done the opposite thing or the opposite side of the strategy, you could have been consistently profitable. Let's say each time you take a trade, you draw a support, you draw resistance, this and that, based on your strategy and your model, and you lose. Each time you take that trade, you lose. Each time you try that again, you lose. And you're doing the same thing. It means if you have done it the opposite side, that your loss could have been win. So there's something that you don't know about your strategy that is making you lose rather than winning, right? So every strategy works. It depends on who is using that strategy and how far that strategy has been proven. And how far that strategy has been proven to be profitable. Okay? So what you do to become consistent is that get a strategy. And what I usually recommend to people is that it doesn't have to be complicated. It has to be as simple as possible. As simple as possible. If you look at my charts, I've done analysis a couple of times. I think most recently, you would barely see many lines, many trend lines, moving averages, that indicator, this indicator, fair value cap, this other block, that other block, 1 hour opening. I don't do all of that stuff. Doesn't mean I don't know it. I know it. But what is my point? I'm saying I simplify everything to price action. It's very simple. Knowing the direction of the market. So I understand all of that concept. I understand the premium price. I understand, the discount price, the fair value cap, every other thing you want to talk about smart money concept. I do know, but I don't apply all of that because I've come to resonate with my strategy that this is what makes the market. Even if you go to top traders, like maybe go to somebody like Dapo Williams, he talk about order flows and he talk about support and resistance. He majorly is going to tell you this, draw your highs, draw your low, know the market direction, find your entry and find your opportunities. So what you have to do is to practice. So if you can see hear me, guys. So what you have to do
So I can hear you.
to
Hello?
become consistent is to find a way and pick a strategy. Pick one. Can you hear me? Can you hear me now, please? Hello.
Your line is breaking.
Okay, sorry. I think my network is being interrupted. I believe you can hear me now. So what I'm
Yes,
saying
okay, now.
is, yeah, get a strategy like what we've been doing every week. We do have some live sessions where we do analysis. We have a model we are following, and we're practicing that consistently. You need to understand, if you're following my strategy, you need to understand the basic, what makes up my strategy. And then you consistently practice that with your account. You're going to see all these market scenarios because they are all repeatedly, many of them are repeatedly market scenarios. Okay, so it's easy by finding your strategy, be committed to that strategy, and learning. Start with the basic of it, not complicated thing in it at all. On these days, I'm going to teach you guys price action. I don't know. Have you ever joined my live session before where we do analysis?
Yeah, I joined once.
Once. Okay, so when we have other sections where we talk about price action, I will teach you some of you my models, how I trade and how I see the market. It might not be something new, but I will tell you it's simple. Just know one or two things that makes you profitable. Hold on to that thing and stay away from the noise. There are other things that involves, like I don't trade every day, but I'm in the market every day. I show up every day to the market. But I will tell myself this setup is not for me, or I'm waiting for this price action. Like let me show you guys something here. If I can, let me see if I can go to my what do you call it? My trading view. Let me load my trading view. I want to show you guys something.
Okay,
This
sir.
Europe USD, yeah, the Europe USD that you're seeing, we did the analysis last week, I mean last 2 weeks or so. Let me show you. I think that analysis is still open. Now look at this price action. Tell me what you see. Hold on 1 minute. Now tell me what you see. Look at this. Can you see the same price action we forecasted? It's what happened on Europe USD. The chart is the thing is I think I have before now. I took a screenshot of this. I probably will show it later. We forecasted this price right from here. In fact, we started trading this market right from here. This is where we started trading this market. We traded this sell. We traded this buy. We traded this sell. The only thing that we didn't trade was this particular sell here. Is what we didn't trade. That's because I was busy and I didn't want to trade that sell. How do we end up there? Because we already had a forecast before now. You can see what we did. We have our low here. We have our high here. And that, I think I still have that video if I don't make a mistake. There's this video of this analysis before we have this price action day. And look at what we did. The same place that we forecast that price is going to bounce. Look at this. We're supposed to sell here, bounce here, do a retracement, and see sell off. It happens the same. If you look at the patterns, you will see. How do we know that when price gets to this low, we're going to have this, push up, continuation to sell to this level? It's because we have seen this pattern repeatedly, and we understand this price action because we have a strategy, a workable strategy. So when you understand your trading strategy, you'll be able to see, you're not going to rush the market. You'll be able to see your price action and you wait. And if you see this 4 hours time frame, it took almost how many days? If not, let me see. Okay, daily time frame. It took hold on, I want to switch to daily, 5 days, 1 day. Hold on. Okay. So it took us how many days to meet that target? How many days? This is where we were. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. That is 2 weeks price action to reach where we were targeting. 13 days. So you can see that when you understand how your price action works, you're not going to wake up and just start trading, go to lower time frame and become a scalping is good. In fact, I do a couple of scalping a lot. That's why you probably might see my trade history. You will see a lot of, if I'm trading Europe USD, you'll see a lot of Europe USD close positions. That is because I don't take those positions once. I know my bias, I know my direction, and I know that this is going to be a long term. I think this trade was one of those trades that I said I was going to hold this trade for a direction of the market. Each time it gives me maybe a pull where the volume, because you cannot tell where the volume is coming, except there's a fundamental that is going to push the market a very high volatility and all of that. So this just come on. Can you hear me?
Yes.
Hey.
Can you hear me, guys?
I can hear you.
All right, sorry. My network is being interrupted. That's why. So
Can
all I'm
hear
trying to say is, you have to learn and practice and show up every day. You may not take the trade every day, but showing up every day is going to help you a lot. Develop your trading skills and give you more understanding of what the market is doing and following other strategies that resonates with you. And when you follow those other strategies, you'll be able to consistently learn to improve trade and give it time, and it's going to just see it work, right? That's how I can answer that question for now. I don't know if I've said something that's reasonable to you at this point.
Yes, sir. Thank you, sir. So, sir, between the price actions and also these indicators to trade, which one is more preferable?
Like I said, what you mean by being preferable is how you understand what you're doing with the strategy. I have friends that trade smart money concept. They're highly profitable, and I don't argue with them when they see their price action. What that means is that they understand what they are trading, and they give it a name, and it's working for them, right? The general bias or the general concept of any trader is to understand how to interpret price for itself. However, when you learn a certain strategy, you have to understand to a point that you can interpret that strategy to your understanding, to the language of your understanding. At that point, you become a master of it, and then it becomes seamless for you when you want to use that strategy to trade with. And is it at learning something? Like, it's more like having a creation. You create something from something. There's nothing really like original, I should say, because you have to learn from a pattern or learn from somebody, and then you modify. Everything you see being made is being made out of something. So every strategy that you have, 1001 strategies, they are not standing alone. They have confluences. That's why in trading we have confluences and we have trading criteria. So you look at a model and look at how it performs, and then you adapt it trading strategy and redefine it to become your personal strategy and concept. So I can't say any of them is superior or far preferable. It depends on who is behind the strategy. Okay, like I told you before, like every strategy is working because if you consistently lose from a certain strategy, it means that strategy is also a profitable strategy because if you had done the opposite side consistently as well, it could have been profitable. It's just that you don't know how to use it to work for you.
Okay,
So,
sir. Thank you very much, sir.
yeah,
I'm grateful.
yeah, thank you very much. You're welcome. So, any other person with a question? This has been a long class. Okay, so okay, somebody you raises up your hand. Come on, what's the name? Ifoma, go ahead and ask the question, please. Can you go ahead and ask the question? Can you hear me?
Hello, I'm hear you. Good afternoon, sir.
Yeah, good afternoon, please.
Yeah, my name is Ifom. My question is just I'm having difficulties in Trending View. I downloaded Trending View, but I don't know how to activate it to put
So
it
hold
in
on, please. You
normal.
say you have difficulties. You have difficulties with what?
Using the Trending View. I downloaded it, but I don't know how to activate it. That's to make use of it, the tools and everything.
Okay, so if I'm not sure I get what you said. You see, you downloaded trending what?
Trending View.
Trading View.
Trending View, yeah.
Okay. Trading View. Yeah, we'll come to Trading View. Like I said, we use different platforms for different purposes. So we use Trading View because Trading View, allows us more tools, a more free platform. It's very easy to navigate through. It tools. Like the chart is very freely. You can manipulate anything with your chart, draw anything you want to draw. So it's more like somebody using Corel Draw, and the other person is using you're using Corel Draw, and the other person is using Photoshop or Microsoft. So yeah, they are similar in function, but one makes it flexible and all of that. So you have to learn how to use TradingView. We use it mostly for chart purpose and analysis purpose because it gives us more tools, like I said, and more user-friendly experience than MT5. So it's simple. You will have to create an account. You just use your email and log in, and then when you log in, you can use a desktop. It's gonna make sense more if you have a tablet or you have a laptop, because your phone it might not be able to show. If you don't have an optimized phone, maybe a phone with high memory and all of that, you may not be able to load it. Okay, because it's stronger than MT5. Yeah.
Okay.
So,
I will not keep it pending because it's phone I'm using. But that will be
so but you can use it on the web. You can use it on the web. I don't know what is your problem, but specifically, but talk to our support. It will know what is the problem, whether it's your phone or it's that you don't know how to log in on the browser.
No,
and all of that.
It's not the I've downloaded it, but for me to navigate around it, that is the problem I'm having.
Okay. Don't worry. We will share a video on how to use Trading View soon, or we will do a live session like this, and we'll teach you how to get around your Trading View. Okay.
Okay, sir. Thank you, sir.
All right. So, any other person with a question?
Yeah, good afternoon, sir.
Good afternoon. How are you doing?
I'm good, sir. And you?
I'm good. All right.
Yes, sir. Yeah, I don't have a question to ask for now, but it's just a little bit challenges I'm having when trading, sir.
Okay, so what is the challenge?
Yeah, whenever you drop a signal or whenever I entered a trade, I will be in profit. But before the end of the day or before I run out of the market, you'll see that I will end up losing instead of securing my profit. I don't know if You have one word or two that you can advise me on that. I don't even know, sir. I will be in a profit, but before I leave the market, I will end up losing. Like
Okay,
yesterday
so
now, I earned almost $216. But when I see the market keep going, I now go back to the market. Before I know it, I bounce the account.
now your problem is very simple. Okay, your problem is just about discipline and being accountable. It's accountability problem. It's not trading problem. As long as you make money from the market, it's not even a trading problem. Trading problem. Now, because if you make money from trading, what is the next thing for you to do? Is to take your money out of the market and wait for next opportunity to trade. It's as simple as that. You take a trade and it gives you $200. The best thing, you cannot exhaust the market. That's what one people don't know. You cannot exhaust the market. If you see what I just said with you guys now, that we traded these markets, Europe, USD. I think I aligned it. Aligned where and where we traded. We take a buy, we took a sell, we took a buy. But were we still expecting that the market was going to continue selling? We expect it was still going to continue selling, but we can miss it. We don't have to trade all the price action. We don't have to trade all the moves, because that is where you trade and your money stays for you, because you keep trading and making money and keep going back to market that is noisy, and then you lose back the money. The market is open 24 hours. It is you that will discipline yourself to know when to trade, when not to trade, when to take your profit, when to take your losses. What amount of risk exposure do you want to expose yourself into? How long do you hold a trade or not? Understand that you cannot exhaust the market. Even if they show you A plus setup, this market is going to go to the moon. You cannot, because the market works in cycles. So the market is going to go in your direction, it's going to come against you in your opposite direction. So it's for you to know when to exit the market while it's going to come against your direction, and you wait for the next opportunity to continue in your direction. So if you stay and you make $200 now, believe me, in the next 4 hours, 5 hours, that $200 is not going to be $200. It can be more or it will be less. So they want to see at the moment, and you're satisfied with it, with your risks and all of that. You take it and wait for the next opportunity. So there's nothing like you kill the market. You don't kill the market. Okay? So learn to be satisfied with what the market is giving to you at the time, and learn to know when to come back to the market and when to stay away from the market. It's going to help you and to solve that problem. So I think we've already used a huge amount of time. Any other question, please? We will answer.
All right. Thank you so much, sir.
All right.
Hello,
So I
sir.
want to believe that. Yeah, thank you very much. We will have some of these questions, answered in our community. Please, let's do well to be committed into this. There are no two ways about that. If you're in Nigeria, like we are now, you can understand the state what the country is. So if you're not committed and do the right thing, you may not. It might be very difficult thing to scale through, right? So trading is another hope for some people, another opportunity for some people. If you're one of those, you have to take it serious. So I'm gonna call off the session today at this point. So we'll plan for another one. If you ask questions, please write us on the support and write on the community. We're here to support each other. So thank you guys for the time. I appreciate you guys, and let's have a wonderful day from here. We'll see you
Thank
somewhere
you,
else.
Thank you
sir.
so much
Thank you,
for
sir.
having us.
Thank
All
you
right, you're
for your
welcome.
time, sir. Yeah.
All right.
Bye, everyone.